Tell me, tell the viewers, why there's nothing to fear about tonight.
Well, Jackie, that sounds like a crazy statement, but if you look beyond the next couple of weeks, I think it pretty much won't. And certainly the where we think the market's going to go, the sectors we're in, the levels that we expect to see on the upside in 2017, none of those are based on who is elected president. So I think the bottom line is, though, and I think we're all pretty much in agreement on this, is if Donald Trump wins, you're going to see some market downside. Probably, I don't know if it's going to be severe. I certainly don't think it's going to be a Brexit kind of a deal, but you'll see some market downside. We'll test those technical stops below 2085 in the S&P 500, and we'll see how much follow through there is. I don't think there's going to be a lot, but there'll be a little. On the other hand, if Hillary Clinton wins, the market's pretty well priced that in, I think, or certainly is leaning that way. Our targets had been for year-end 2016 that we'd see the market in the 2190 to 2290 range at the end of this year. And really, that's where I think you're going to see it. That's fair value. And I think really, if Donald Trump or Hillary Clinton wins, we're going to see the market at the end of the year in that range. I think that's a very likely outcome.
Scott, in your opinion, what are the markets telling us today about who they're predicting? Obviously, after the FBI issued its second letter exonerating Hillary Clinton, the markets seemed to think that she was going to make it.
Yeah, I think the market action would agree with you, Jackie, and I think that's the way the market is leaning today because, really, the market, as we all know, does not like uncertainty. Hillary Clinton represents a status quo, a lot of certainty. She's been around a long time. We know what's going on there, and we know what to expect, where, on the other hand, Donald Trump never held elected office before. And we don't really know what might happen there. So, but I will say this about either candidate, and this is what we've been telling our clients for a year, is that whoever wins this election is not going to have any impact on the trajectory of the economy for the first 12 or even 18 months that they are in office. The market might worry about what might happen 2, 3, 4 years from now for a little bit, but pretty soon it's going to be what's going to happen with earnings and the economy over the next 6 to 12 months, and whoever the new president is going to have very little, if anything, to do with that.
All right, I'm going to push back a little bit there because they both have different views on job creation, and they both have different approaches on taxes as well. Those are both issues that will impact corporations and impact the market.
Yeah, I think so, and certainly, let's say we had the Democrats run the table. Hillary Clinton's president, they control the Senate, they control the House. Personally, I don't think the market would like that very much because we're going to see a lot more regulation and a lot more taxes, and we're probably going to see it pretty quick. I think that's a very, very low probability, though. Our highest outcome is Hillary, highest probability outcome, even though it's only about 40%. Hillary Clinton wins the White House. Democrats take the Senate, Republicans hold the House. So that's a little more neutral on the market, and that's one of the reasons why I think we're likely to see the market at what we consider anyway fair value at the end of this year.